Hello and welcome to my channel. Let's talk business once again. And as always, I'm very happy and delighted to see you here. And I'm very happy to discuss our next topic, which is Brexit and its impact on London insurance and world insurance, along with its impact specifically on Lloyd's and Lloyd's response to Brexit by opening the Lloyd's Brussels subsidiary. So initially, I was thinking to have one session covering all these things, but then later I realized that it may be a too bulky video and may be difficult to understand properly the various part of the entire Brexit scenario. So later on, I decided to break the entire session into multiple parts, part one, two, three, etc., and deliver the chunk of information so that we can able to understand it in a better way and create a solid fundamental ground on which we can discuss and understand further. So here we are with the part one. So in this series, I'm going to discuss the introduction about the Brexit impact on London insurance market, and I'm also going to discuss about the Brexit impact on Lloyd specifically. And then we will move to Lloyd's Brussels subsidiary, where we are going to see the impact on managing agent, syndicate broker, cover holder, and service companies. We will also see how Brexit is impacting the existing process, which is related to placement, claim, endorsement, binder placement, board work submission, and account and settlement. We will cover all these things in subsequent sessions. Going forward in this episode, I'm going to talk about the introduction to Brexit, and we will also discuss about the impact of Brexit on London insurance market. So let's begin. For those who are new to my channel, I am Ravi Shankar. I'm having more than 14 years of experience in business analysis. I'm largely associated with PNC and general insurance domain and currently practicing in Lloyd's of London. If you have any query related to this session or my previous session, you can send me email at ravi.s.sharma@hotmail.com, and you can also drop me message at my LinkedIn inbox, which is at linkedin.com/in/Ravi S. Sharma. Once again, thanks a lot for all your queries, all your suggestions, all your appreciation. I really love them. So let's begin. So before getting into the Brexit and its impact on the insurance market and Lloyd's, etc., first we have to understand few of the fundamental things about the Brexit. Brexit is the withdrawal of UK from European Union through referendum held March. In this referendum, 51% of the people in UK voted to leave EU. As a result, government evoked Article 50, which is basically to tell EU that we are leaving you. And the entire exit process is a 2-year process, which is expected to get over on 29th of March, but the time got extended till 31st of October. So if you can see over here, 72% people voted for this referendum and 48% said that they want to stay within the European Union, whereas the 51.89% said that they want to leave the European Union. We will talk more about why people think that they want to stay or why people think that they want to leave in subsequent slide. So going forward, we have to understand what is Great Britain, what is this UK. So here, if you can see on my left, we have a hierarchy over here on the British Isles. So here we have a United Kingdom. Within the United Kingdom, we have Britain and Northern Ireland. And within the Britain, we have Scotland, we have England and Wales. So you can see over here, we have England, we have Scotland, we have Wales, and we have Northern Ireland. So if you can see, the Great Britain is this part. Okay, this part is the Great Britain. And the UK itself is this whole part, along with few other island nation called Isles of Man and Channel Island. So this is a very brief or geographical setup about the United Kingdom, Great Britain, Scotland, England, and Wales. So let's move. So coming back. So in this referendum, the people from England, people from Scotland, Northern Ireland, and Wales casted their vote to tell that whether they want to stay in EU or not stay in EU. There was a very interesting outcome from this referendum. We will talk about that outcome later on, that how people reacted to this referendum, whether to stay within the EU or not. Then going forward, we have to understand quickly that what is European Union? It is a political and economical union of 28 member states located primarily in Europe. And what they do, they act and work as one economical bloc so that they can support their own economy together. And they provide easy travel across the border within the European Union for their members. And they also create the harmony on the continent. So if you can remember, during the World War, the entire Europe was disrupted and they don't want to do it once again. So they wanted to have some sort of setup so that they can create the harmony within the continent. And this European Union setup also helped people to modernize their activity. Each and every country within the European Union, they exchange the technology, the latest technology, so that everybody can take benefit out of it. And they also create a lot of job so that the public remain employed and their growth will be sustained. And then they also have very strategic internal or international security tie with the different nations, including NATO, so that they can exchange the security information and then they can protect their own interest across the globe. Now, let's talk about the UK in the European Union. So UK joined the first, which stands for European Economic Community in 1973. And then in 1975, the referendum happened where the people say that they want to stay within the European Union. Then after some time, there was a party called UKIP party, which stands for UK Independence Party. I think this party formed in 1993, and the main agenda of this party was to have the United Kingdom separated from the European Union. And this party got 26.6% EU election 2017, which emerged as the largest party. And what happened subsequently, that the UK general election, this UKIP party got 12.6% of vote, which means that this party emerged as a third largest party within the UK. So if you can see over here, the people started thinking about to get separated from the European Union for different reasons. And as a result, the IP party was gaining momentum. The referendum to stay or leave the EU was a political promise by the Conservative Party. So Conservative Party, because the popularity of the UKIP was growing day by day, Conservative Party want to stop it, and they make referendum as a political agenda to promise that if they come into the power, they will do this referendum. And this is what exactly happened. The people showed trust on them. The Conservative Party won the election. That David Cameron elected as a prime minister, and as a result, he actually conducted the referendum on 23rd of June 2016. And in my personal opinion, that's the biggest mistake what Conservative Party did. By the way, for your information, the referendum is not a legal binding, which means that it's just an opinion. The government may accept or may decline it, but here the government can't decline it because the public opinion is with the referendum is to leave the European Union. So government has to honor the public opinion, and that's the reason they triggered the Article 50 to leave the European Union. Now, again the major question is why UK want to leave European Union, and one of the reason is a huge EU membership fees, which was earlier 2.7 billion pound in 2008, which was increased to 11.3 billion pound in 2013, which is very, very heavy price to stay as a member within the European Union. By the way, this fees actually depend on the country's economy. If you have a smaller economy, then you have to pay less fees. If you have a larger economy, then you have to pay larger fees. Then the people also think within the England that a lot of bureaucracy in the European Union, which is hampering the UK growth. So in order to get the things done within the European Union, they have to follow a lot of different processes, which they think that is hampering the growth of the UK. And then they also felt that they have less control over the lawmaking power. So people in England was also thinking that they have a less control on the lawmaking powers. Then the immigration was also a big factor because the people in England, they was thinking that the people, especially from the Eastern Europe, they are coming to England and they are utilizing their resources. And then people were also thinking that if they get out from the European Union, they can paste up UK economy just like Singapore economy, so that they can quickly get the upper edge. So these are the few important points which says that why people want to leave the European Union. So as a result, the referendum happened in 2016. You can see over here, the 51%, 51.89% people said that they want to leave the European Union, and 48.11% say that they want to remain within the European Union. And the voter turnout was close to 72.21%. But from this referendum, there was a different image emerged within the United Kingdom about their opinion to stay or leave European Union. And if you see over here in this diagram, the half of the England, in fact, the entire England voted to leave the European Union except London and Scotland and Northern Ireland. So if you can see clearly, the entire UK was divided into England and rest of the England. Immediately after the referendum, the UK sterling noticed a sharp decline against the USD, and the FTSE 100 was also sharply declined and registered a down of 3.5%. So this is the immediate impact of the referendum, which held in 23rd of June 2016. So what happened after the referendum when people say that they want to leave? So what are the terms and conditions of leaving the European Union? The Brexit offers the UK two options, the deal and the no deal. And within the deal, we have soft deal and hard deal. So let's talk about the no deal first, and then we will see what is there in the soft deal and the hard deal. So in the no deal scenario, the border recheck could be reintroduced. And this may be a problem for the most of the country, and specifically for the Republic of Ireland and the Northern Ireland, which is there as a part of the UK. At this moment, the UK control Northern Ireland, where the Republic of Ireland is free. At this moment, nobody is making any noise because the people are able to travel across the island. But if they put a hard border in place, then that will restrict the people to move freely from Northern Ireland to Republic of Ireland, and that may create a problem. So that is one thing. The transport and trade between the UK and EU could severely impact, and adults may not able to drive EU countries without a special driving permit, or maybe we can say the green card. We can also discuss about it later on, that what are the impacts. Now, in the deal scenario, we have two type of scenarios: soft deal and a hard deal. In the soft deal and hard deal, here is a comparison. If the soft deal happens, the UK will have a similar right like a Norway. So Norway is not a part of the European Union, but Norway is a part of their single market through EEA, European Economic Area. In case of hard deal, UK establishing a relationship through World Trade Organization arrangement. So on the other side, in the soft deal, UK is going to have access to the single market, which is good, in my opinion. And in hard deal, no access to the single market. The free movement of labor is a provision within the soft Brexit, whereas controlled immigration is a provision under the hard Brexit, which may impact the UK. So in the soft Brexit, the UK has to contribute to the EU budget, whereas in the hard Brexit, the UK no need to contribute into the EU budget. Going forward, let's have a quick look at the timelines. So 18th February, the announcement of EU referendum happened. 23rd June, the referendum polling day was there, and 17th January, the Theresa May lay off the Brexit strategy, Lancaster House speech, which was heavily criticized by the opposition, and 24th February, Supreme Court ruled the Parliament must vote on triggering the Article 50. Parliament vote to trigger the Article 50 on 30th March, and 29th March, finally the Article 50 triggered, which is a formal communication to European Union stating that UK want to withdraw from European Union. And as a result, March 2019 date was set for UK to exit the EU, which got extended to 31st, 2019. Now let's see the quick impact on the UK insurance industry and Brexit. So we can see here the UK industry is the largest in the Europe and the third largest globally, contributing over 25 billion annually to the UK GDP. It's a huge money, and it also employs 314,000 people within the UK alone. So if you can see over here, the UK industry is also one of the country major exporter, which is with 28% of its net premium coming from the overseas business. And the UK industry, we already discussed about it, industry is the third largest in the world and the largest in the Europe. You can see over here in this infographic, which is slightly older, but I think is still relevant, that the UK is the largest within the Europe, which is contributing 1.8 trillion worth of investment, and it is the third largest in the world, and which contribute 11.8 billion to the UK economy. Now let's talk about some of the challenges, and one of the challenges is passporting. The passporting is the key issue for the underwriter, insurance underwriter. The number one issue concerning many underwriters is that the access of the unified market or the single market covering 28 countries with the sum of the half of the billion people around it. So if the UK is leaving the European Union, then the insurer might not able to use this passporting, or in other words, they might not able to freely insure people across the European countries. So that is one of the problems. In order to settle the problem, the UK should stay within the single market as a part of the soft deal, probably joining the EEA, or may open the subsidiary within the EU, which allow passporting rights. So in both the option, it is expensive and it is going to be costly for the UK insurer. Now let's talk about the Lloyd's. Lloyd's stated that approximately 4% of their global gross written premium is at risk. The EEA only contribute 11% of the Lloyd's total GWP, gross written premium, and now the UK reinsurance industry carries out a large proportion of the cross-border transaction with Canada, United States, and Bermuda. And for the Lloyd's, approximately 47% of their business is coming from this country. The next is the Brexit cost. The Brexit cost may, or the result of the Brexit may actually hit the share prices of many insurers within the market. And then there was an additional cost through having a redraft wording, change literature, documentation, website reflecting their non-EU status, etc. So they have to incur a lot of cost as a result of Brexit. And the sterling value has also dropped, correspondingly raised the insurer cost. So these are the few costs associated with the Brexit. So here is the next economic and short-term losses. So whenever there is an economic downfall, people buy less insurance. We all know that. And Standard & Poor has recently cut the UK credit rating from AAA to AA, stating that the referendum could lead to a drop of economic performance of UK. And that's true actually. So the country which is having most hit this Brexit is the UK. And their economic performance is going to get impacted, which Standard & Poor already predicted, and as a result they have downgraded their rating from AAA to AA. And Moody has also downgraded the credit rating of some of the UK insurer due to the market uncertainty and the effect of referendum on the capitalization. So the same cascading effect, and the Moody's also predict that some of the UK insurer will not able to perform well or after the UK exit the European Union. Now, the another aspect is the job as risk. The UK insurance sector is majorly employer with around 300,000 people working in it in the recent year, and growing emphasis is on developing and the professionalism. So there are a lot of people working within the UK insurance sector, and one report set up saying that 48,000 jobs could be at risk due to this Brexit effect. So maybe a lot of people will leave UK and then go to Europe. The another aspect is the impact on claim. Then depending on how Sterling react, for example, there could be a raise in the cost of the motor claim because the Sterling cost is lower, and the property claim could also require import material or tools. Business holding large amount for imported stock may also need to revisit their sum insured. So the downgrade of the pound sterling may also raise or trigger a sharp raise in the insurance claims. Then the cost of repairs is also going to get high. For example, if there is a shortage of car technician and the builders and the maintenance staff, then if some of these roles are filled by the European and other migrants, then they choose to leave UK, and then this may higher the wages cost and the costlier claim. Now, if there is no person there, if there is no person to support this job, job of technician, builder, maintenance staff, etc., then the wages will go higher and the claim cost may go higher. So there are other impact also. Say, for example, if you are driving from UK to European Union, you need to hold a green card. The travel insurance is going to get expensive, and these are the some of the impact of UK leaving the European Union. So that's all for this session, and I hope you have enjoyed this session, and we will talk about the other aspect of our UK leaving the European Union in the next subsequent presentations. Thanks for listening, and bye bye and stay blessed.